Okay, there's one more person joining, I guess. Give me a minute. I thought somebody was joining us. All right. Though you know me, I thought I'd just formally introduce myself. I am David Babu, financial planning and insurance advisor. I have over 30 years of professional experience, which includes leadership roles at leading advertising agencies such as Saatchi and Saatchi, Ogilvy and Mather, and Creative Fusion. Uh, I'm sure most of us know what these agencies are. For the ones who are not in sync, these agencies are internationally acclaimed agencies who have worked on all the major brands some point of their life. And I bring a strong foundation in strategic thinking and communication to financial advisory. And in my current practice, I work very closely with professionals and families to help them build a clear financial structure covering protection, investment, and a long-term planning. I have published more than around 100 educational videos on financial planning, life insurance, health insurance, and mutual funds with a single mission to simplify complex financial decisions and enable confident action. All my videos are there on the YouTube channel, on my YouTube channel. You may visit, it is www.youtube.com/@ of David Babu. You may visit the channel, watch my videos, and I'll be very happy if you can drop in a comment on the comment section as to how it helped you or how it benefited you. And if there is any other topics you would like to want to know more, I would be happy to make videos on such topics and post it up there. Educationally, I am a bachelor. I've done my bachelor's in biochemistry and my master's in mass communication and journalism. That was me. And now moving forward to our presentation. And before we do that, I would like to pose a blunt question before we start. It may kind of jolt us to reality, I'm sure. Let's say if someone in your family needed emergency heart surgery tomorrow, God forbid, nothing such like that should happen. Hypothetically, let's say if someone in your family needed emergency heart surgery tomorrow and the bills ran something around rupees 8 to 12 lakhs, do you have it ready with you? Do you have it ready with you without breaking your savings, investments, or without digging into your children's future funds or pledging a property, disposing the property? Do you have that kind of a money ready in hand? I would appreciate if we respond with a yes or no, just to see how prepared we are. Can I have responses from the audience, please? No? Okay. Thanks for the response, Mr. Alex. Not to worry, we are not alone. The numbers are startling. 63%, a whopping 63% of Indians do not have any personal health insurance. And yes, Mr. Srinivas, so most of us are the same bandwagon. Rupees 6,788 is a single day's stay in a private hospital for in a town somewhere like Jodhpur, I'm not even saying metros. So you can see how expensive it is. Rupees 6,700 odd average expense in a private hospital. And this is even more alarming. 3 to 7% Indian families are pushed into poverty just because of medical bills year on year. And today's session is about making sure your family is never ever in that position. So let's start. Let's see what all we'll cover during the next 1 hour. So I'll keep the presentation around an hour or so. So let's see what are all the points I will be going through. I will touch upon 10 essential topics that will transform definitely how you think about health insurance and how and why you need to protect your family's financial future, your first step being health insurance. We'll see some numbers, some brutal numbers of healthcare costs in India. Then we will see what actually is health insurance or what it is not, who needs it, and when should they start. We'll see a few real life stories, both with examples of people who, families which had health insurance and the families which did not. A couple of stories or more we'll see. Then we'll see what is this medical inflation. Why do we call it a threat? How big a devil it is and what practically it means to us. After seeing all that, we'll see what should a good policy cover, and we'll burst some myths on corporate cover, which dangerously some companies, employees live in. Then we look at the very logical step, how to go about choosing the right plan. And what are the key features you should be looking in or insist on while buying a new policy or while relooking, restructuring your existing policies. And finally, for those who need more information or customized approach to their health insurance or any other financial decisions, I will let you know how you can get in with us on a free consultation where we can analyze their personal uh, protection, investments, and savings. So with that, let's go to the first point. Like I said, some numbers, some real world numbers. Rupees 1.17 lakh crores. This is the amount of health insurance premiums which were collected in the year 2024-25. So says IRDAI, not me. 58.2 crore lives were covered by health insurance in the year 24-25. 14%. Now, I spoke to you about the insurance premiums which were collected and the lives which were covered, just to give an idea that this industry on health insurance is a robust one. It's already functioning well. Most of the people, most of the Indians are already covered, and the ones who have not taken this shield, I think it's not a very difficult situation or difficult decision for us to take, because this is a already existing robust industry which is on. At 14%, can you guess what it could be? 14% is the annual medical inflation in India, and it happens to be the highest in Asia. How it impacts, we will see that in the subsequent slides. 39.4% A good 39.4% people spent out of their pocket to fund the total health expenditure, which was documented in the year 24-25. And what was that amount? Rupees 6.1 lakh crores. 6.1 lakh crore was India's total health expenditure, and 39.4% of people had to shell it out of their own pocket, which means around 2.44 or 2.45 lakh crores were borne by the patient or the patient's family. And 55% households were projected to have some kind of a health insurance coverage by the year 2025. So the key insight, if you have to see, despite rapid growth, over 45% of Indians still bear the cost of hospital expenditure out of their pocket, out of their own pocket. The health insurance market is growing at 20.9 CAGR. Medical cost growth is outpacing the coverage, and middle class families are the ones who have to be very careful about it. All right. I've been saying health insurance. Most of us know what it is, but exactly if we have to say, put it in a small elevator pitch, what it is. If you take help of an analogy, you can say it is like an umbrella. You carry your umbrella not because it's raining right now or whenever you carry, but you do that because if it does rain, you don't want to get drenched. Similarly, health insurance is your financial umbrella for the storm of medical emergency. How does this work? You pay a small amount. You pay a small amount, like you would pay for your house or a car insurance, which is a very predictable, manageable annual cost. And then when a medical event happens or an emergency happens, in that event, your insurer pays your bills, cashless or reimbursement, depending on which hospital you are. So you don't scramble for funds. Your savings are protected, your investments are protected. Above all, you maintain peace of mind. Your family doesn't have to sell assets or break investments. Because we know savings are built over years. But one cancer diagnosis or a cardiac surgery has the power to wipe out 15 to 25 lakhs in just few months. All these years of savings, all the years of meticulous saving gets wiped out in just one hospitalization if we are not careful. This catastrophic risk is what insurance transfers to itself. It transfers that catastrophic risk for just rupees 10,000 to 30,000 per year, which turns out to be as less as 25 to 82 rupees per day. Now, I said medical inflation. What is it? This is that silent financial threat. If you look at general inflation, it's growing at 6%. If you're in a good company, your salary would grow at around 8.8%. But medical inflation ruthlessly grows at 14%. Says who? Says the Deloitte India Talent Outlook report, Mediasys report, Echo Health Insurance report. What does that mean to us? What does a 14% medical inflation mean? It means that the medical costs double every 5 years. A 5 lakh surgery today costs rupees 10 lakhs in the next 5 years, or a whopping 40 lakhs in 15 years. Excuse me, there's another guest coming in. And the gap widens every year we delay. Your salary would go at 8.8%, but the medical costs, they keep climbing at 14%. And I told you, this is the highest in Asia. Buy young, buy it when you are young, buy it when you are disease free. So you buy it for less. By what? By health insurance. The premiums rise 10 to 15% annually. Locking in at earlier ages saves you thousands of monies over lifetime. You see that situation. If you do a reality check, a 10 lakh surgery today will cost 50 to 75 lakhs by the time you retire. At the current medical inflation rates. But it is rising year on year, so we don't know how much it could go to. Why are we saying that? Let's check on the medical treatment costs. That could give us an indication of how deadly this inflation is. Now, these costs are private hospital costs in the year 24-25, and what they will be in the year 2030 after the inflation adjustment. A heart bypass in 2013-15, 10 years back around, it costed 2 to 3 lakhs. 24 to 20 in the year 24-25, it costed 4.5 to 7 lakhs. By 2030, the same could cost 9 to 14 lakhs. Angioplasty, 1 to 1.5 lakhs 10 years back, 2.5 to 3.5 lakhs last year. By 2030, it could rise to 5 to 7 lakhs. Same with the case with cancer surgery, with chemos, 6 to 7 lakhs. 10 years back, 13.5 to 31 lakhs in the year 24-25, projected to go up to 48 to 52 lakhs by the year 2030. When I say 2030, it looks far. I'm talking about just 4 years from now. Kidney transplant used to be 5 lakhs. Last year, it was 15 to 18 lakhs. Projected in the next 4 years, it could go up to 80 lakhs. Heart issues, heart transplant, 12 lakhs 10 years back, 30 to 35 lakhs, 24-25, 55 lakhs is what it would be in the year 2030, which is 4 years from now. And now, these are not worst case estimates. These are average costs at reputable private hospitals in Indian metros. Without insurance, a single event on this list can permanently alter your family's financial trajectory. No doubt about it. All right. So who all needs health insurance? Can I have some answers? What do you think? Who all needs health insurance?
Everyone.
Everyone. You're right. All of us need health insurance. Even if we have enough money with us, still we need to go for health insurance because we cannot cope up with the inflations which are happening. So, like you rightly said, everyone. If you are a young professional, you're healthy now. That's the best time to buy. You don't have any diseases. You don't have to disclose anything. You get a good cost. If you're a family with children, yes, children get hospitalized very often till they achieve a level of immunity. They are in and out of the hospitals. If one parent in a family gets seriously ill, the whole financial goals take a toss. Corporate employees, we have this pseudo uh, piece that my company is taking care of me. Not so. We'll see that in the following slides. Your employer cover would stop the day you stop your job, the day you leave your job. Even otherwise, 3 to 5 lakh group cover is insufficient for major surgeries. You have to have a fallback individual policy. Parents and seniors, 60 plus, seniors are spending 17.4% of their income on health. And premiums are also expensive after 60. Till few years back, after 60 age, there used to be copay. There still is, but there are a lot of policies where copay is not there. But then it is not advisable to wait till that time because we don't know what are illnesses we may get. And after we get, it gets very difficult to get any kind of a policy. Self-employed and business owners have this logic that I don't want to block my monies with all these useless premiums which I won't be using for years. I would as well use it for my cash flow. They have to be very careful. They don't have any employer safety net also. And one hospital expense or one hospitalization can disrupt their cash flow, the very thing which they say they are saving. It can halt business operations and drain the working capital which they would have taken years to build on. IT and tech professionals, they have to definitely look at it because lifestyle diseases, they don't look at the age at all. Diabetes, hypertension, cardiac situation, they are rising fast because of the sedentary work from home, still jobs. 1 in 3 Indians about 30 definitely has a lifestyle disease today. If we are 6 of us, at least 1 or 2 of us definitely have a lifestyle disease. It's alarming. It's there. It's happening. It's not just a prediction. Like a learned man, a wise man said once, the right time to buy health insurance was yesterday. And if you miss the bus, the second best time is today. Now let's look at some real life stories. I will be giving you a comparison of 2 people. Both of them had a sudden heart attack. One man without health insurance, the other with health insurance. Now, Mr. Ravi, who's 47 years old, software manager in Bangalore, till all this issue struck him, he thought he's a very wise man. He has saved premiums till his 47th age, and he's done great savings. Unfortunately, he collapsed on one fine Tuesday morning in the office at work. He was rushed to a top private hospital. And they said, you need to go through angioplasty. And they kept him in the ICU for 4 days. 4 things happened. Emergency angioplasty, 4 days in the ICU, 4.5 lakhs down. Medicines, follow-ups for 6 months, 1.2 lakhs down. Lost 3 months of work, loss of pay, another 2.4 lakhs gone. The total financial impact was rupees 8.1 lakhs over a period of 6 months. And how did they fix it? They didn't fix it. They broke themselves. They had to break fixed deposits They had to take personal loan, they meaning the whole family. It's just not one person who's fallen sick. The whole family suffers. Look here, the fixed deposits were for a purpose, but then they were broken. They took loans which they were not wanting to. It was not a planned loan. They took loans. Personal loans cost the max. Ravi's daughter's college fund, he just wiped it off because he had no other way. He was under the stress of debt, and his physical recovery also was very slow because of stress. On the other hand, we have Mr. Arun, a good friend, 45 years old, similar role, same hospital. I don't know, maybe I would have sold him this policy. He had the same condition, went into the same hospitals. Just to make it a little more dramatic, we could say he was in the adjoining room. Hold on, somebody else has also come in. I will just admit him. Yes. Same condition, same hospital, same week. But the difference was, our man had a 10 lakh family policy, which he had purchased 4 years back. Again, 4 things happened. Cashless admission, zero upfront payment, hospital directly billed the insurer. Arun didn't even have to bother how much was the bill. Total out-of-pocket expense, nil, zilch. His investments and savings 100% intact, and the family focused entirely on his recovery, not the bills. Children's future completely protected, and he was back to work in 8 weeks, stress-free. Let's look at the difference. Just because of that 10 lakh cover which he had, what did he pay for that? He would have paid 22,000 per year for a 10 lakh cover. So in the 4 years, around 88,000 rupees he paid for the whole thing, totally. And because of that, 8 lakh plus was his savings. He saved himself of that much debt. Is this ROI even sane? Insane ROI. It's priceless. Can you ever match premium versus the benefit it gives us? No. So I would, at the verge of sounding rude, I would even say it is foolish to try and save 22 to 30,000 rupees per annum, right inside knowing well that something can happen and we may have to shell a huge amount. But we are all cats who have shut our eyes. We think, I shut my eyes, everything goes away. That's not the same way of saving yourself. Okay, the next story. It's about, again, middle class families are the people who suffer more, so we'll just take their stories. The nightmare called cancer stuck. Not only that, 1 in 10 Indians will develop cancer in their lifetime. Says who? Says who? WHO. 48 to 58 rupees lakh rupees is the average cancer treatment in a private hospital. If you look at the year 24-25, 3 to 4 times, 3 to 4x is the rise in cancer treatment costs over the last 1 decade. What was costing 10 lakhs is 40 lakhs. There comes our lady Priya, IT professional, 39 years old, in a fairly senior position. She went for a routine checkup. Unfortunately, doctor says you have breast cancer, but not to worry, it is only stage 2. It's very much treatable, but not cheap. What was the treatment cost? Surgery, 4.5 lakhs. Chemo for 6 cycles, 12 lakhs. radiation 3.5 lakhs, medicines and scan 6 lakhs, reconstruction and follow up 5 lakhs. Yes, it is treatable. At what cost? 31 plus lakhs. How do they cope? If, and only if they had a 25 lakh policy, maybe with a 25 lakh super topper, the total out of pocket expenses could have been nil or minimum, depending on the plan what they bought from which company they got. But unfortunately, Priya didn't take the advice of her friends and the advisor who had visited her. So without insurance, the family had to take a 20 lakh loan and she had to liquidate all her savings and investments. You see, cancer doesn't ask your age, and treatment plans don't negotiate with your savings balance. They are ruthless. Rich, poor, young, old, it doesn't see anyone. The devil, medical emergency, strikes you, and if you're not prepared, you're a poor victim. Till here, anything, any clarity which you need, which if I've been very fast or if you want me to do some modification, you can let me know. Anyone? Hello? Can I see some reactions, please? Thank you, Alexa. Thank you. Thank you. It's
Same
okay for
for
you
me.
too.
It's fine for me too.
All right, great. Superb, superb, Venkatesh. Super, good, good. Great. So we move on. Now, most of these employees, most of the people have this thing. They say, "Hey, I don't need it. I have my company's cover. It covers me." I will very boldly say it's a myth. Millions of salaried Indians believe their employer's group health policy is sufficient. But is that so? Let's see the myth and the realities. My employer provides a 5 lakh cover and I'm fully protected. In reality, 5 lakh barely covers one ICU admission in a metro if it is a major surgery because we're talking something around 8 to 30 lakh rupees. And most of the employees have this good feeling that group cover follows me wherever I go. Does it? The coverage ends on the last day of your office. No job, no insurance, not only for you, for your whole family. The insurer won't reject a corporate claim. Come on, I work in a multinational. How can they reject my claim? The reality, group plans have sublimits. They have co-pay clauses. They have room rent caps. Putting together all these things, they slash down your real coverage. Even if you have a 5 lakh coverage, because of all the limits, co-pays, and the room rent caps, you don't get that much. And people learn that reality when they are at the hospital. Some people say, though I am leaving the company, it has got some buffer time, so my family still is covered. Is that so? No. Spouse, parents, kids, poor it is, all go uncovered the day you switch or you lose your job. You don't even have to lose your job. Even if you have taken up a better opportunity, better company, and if you have decided to take a 10-day rest between two companies before you join them, and unfortunately, if this devil called medical emergency is watching you and he decides to take a piggyback on you, you're gone. You have no cover. 3 to 5 lakh cover is enough for my private hospital. with a devilish 14% inflation, medical inflation. A 5 lakh policy which was bought in 2020 is just worth 2.5 lakh in real terms today. Hello, we need to get up to the reality. Every Indian, or I would say every individual, needs a personal health policy independent of their employer. Am I saying employer cover is bad? No, not at all. Think of your employer cover as a bonus, never as your primary plan. Okay. So, what does a good health insurance policy cover? The core things which a policy should cover: inpatient hospitalization, all the costs when admitted for 24 hours or more, the room, ICU surgery, nursing, and doctor's fees. This is the core part of the coverage. 24 hours nowadays, certain illnesses, procedures which are high tech, which doesn't need 24 hours of hospitalization, they are covered. Pre and post hospitalization. These are the costs which we generally don't see, they hide. These are the medicine costs, diagnostics, consultation costs, which happen 60 days before the hospitalization and 180 days, 6 months after the hospitalization. These are all significant expenses. They should be covered. They are covered in a good hospital policy. Daycare procedures, 100 plus procedures should be covered minimum, which should be covering like cataracts, chemo sessions, dialysis sessions. Because these things do not need 24 hours of hospitalization, but they should be covered in a good cover, or they are covered in a good health insurance policy. Domiciliary treatment, home treatment when hospital admission isn't possible, more so for elderly patients and post-operative care. Critical illness riders, lump sum payouts on diagnosis of cancer, heart attack, kidney failures, brain strokes, regardless of whatever the expenses. There is a small difference here. It is not equal to health insurance. It is a rider. What happens here is the moment you are diagnosed with these things, a lump sum amount which you had taken as a rider gets given to you. So this takes care of your expenses if you are not able to resume your office, if you're not able to resume your work. So for that period of loss of pay or loss of income, these amounts can take care. Family photo plans. Good to have the good policies have a family photo where entire family under one roof is insured. Children, spouse covered under a single policy with shared benefits. No claim bonuses. Good policies, sum insured grows 10, 50 or 100% for every year at no extra premium, irrespective of claims. You claim, you don't claim, this increase happens in good policies. This is your defense against medical inflation. Annual health checkups, free preventive screenings are included in these policies. They catch lifestyle diseases early before they become expensive emergency. Good policies have a good cashless network. 4,000 to 10,000 plus hospitals span India. Zero payment at the counters wherever you go in these network places. Direct billing happens between the hospital and the insurer. You don't even touch your wallet. And there are many modern policies which also cover OPD visits, as in outpatient visits, mental health, home care, Second opinion, maternity. You should always review your policies for these increasingly beneficial standard benefits. Let's bust 5 more myths. 5 very common health insurance myths. First, I am young and healthy. I don't need insurance yet. A road accident or appendicitis doesn't check your age of fitness. It just happens. 27-year-old boy pays 60% less premium than a 45-year-old man. Waiting will cost you more in premium and in risk exposure. 5 lakh is enough coverage for my family. What's the fact? 5 lakh barely covers one major surgery in a metro hospital. The average hospitalization claim is 70,000 plus average one single claim. And for cancer or cardiac issues, you need minimum 15 to 50 lakh. Premiums are a waste. I may never need to claim. These are all like demigods who talk such things. Fact is, health insurance is risk management. It's not gambling. Peace of mind and full financial protection cost less than just 30,000 rupees per year for most families. And it could save you one night cost at an ICU, which could go somewhere between 12,000 to 25,000 a day. Pre-existing conditions mean I can't get insured. A little smarter cookies, they say, hey, hello, hi, I have a pre-existing condition. You can't sell the policy to me. Hello, don't be happy. We are very concerned about you too. We have policies for you too. Most insurers cover pre-existing diseases after a 2 to 3 year waiting period or instantly if you go for a rider. But you should declare them accurately. Non-disclosure leads to rejected claims, not a bad policy. A policy bought without disclosures, they get rejected. And there are a lot of options now for diabetes, BP, obesity, and the things. I'll save money to handle medical emergencies myself. Why do I have to pay every year when I'm not claiming anything? I can as well keep the money with myself and then spend the whole lot if at all something happens. Can that be the true thing? It takes years to save 15 to 20 lakhs. And like I said earlier too, one diagnosis of cancer in 3 months, the whole savings is wiped out. But if you have a coverage, insurance creates that instant financial protection from day one. It doesn't need that runway of savings which you need so many years before which you could save a next amount. So what we are saying, the biggest risk is thinking you don't need health insurance until you desperately do. When you desperately need, no one's listening, nobody will. Because even insurance is not charity. How to choose the right insurance, health insurance plan? Assess your coverage need. Don't go by the premium. Don't tell the insurance agent that I want something for 1,000 rupees, 2,000 rupees. No. See what is that you need. What does your family need? A minimum of 10 lakh per person in a metro. If it is a family quota, a minimum of 15 to 25 lakhs. And you can add a super top-up of 25 to 50 lakhs for bigger emergencies at a very low cost. When you're buying from a company, check that company's claim settlement ratio, CSR. Look for insurers whose CSR is more than 95%, which means out of 100 claims which are going to them, minimum 95% they clear. And always verify the latest IRDA annual report data before choosing any company. See the kind of network hospital coverage. Confirm your preferred hospitals in the cashless network list. Insist on a 4,000 plus network hospitals company only. Check specifically for hospitals in your city and near your place of residence or your parents' place of residence. Understand sublimits and co-pays. Room rent caps. They say 1% of your sum assured, which means if you have a 10 lakh coverage, only 1,000 rupees is your room rent. What you get. This can drastically reduce your payout. So always avoid restrictive sublimits on ICU specialist fees. And if the copay, if you can't avoid, if you go for a copay, let's see that anything about 10% is a red flag. Don't buy anything. They say you have to pay more than 10% as copay. Copays on the total hospital bill. If it is a 10% copay, 10% of the bill you have to bear, and the rest will be given by the insurance company. Don't fall for such things unless you have a reason to reduce your premium, and that is why you go. Even if you do that, see to it that 10% is a max. And pre-existing disease and waiting periods. See to it that your pre-existing conditions have a waiting period of 2 to 3 years max, because that is the IRDA's dictate. By that time, that should be covered if the policy is given to you. Choose the shortest possible. Some insurers nowadays even offer 1 year PED coverage, as in after 1 year, the pre-existing conditions are covered. See to it that your policies are lifetime renewable. The lifetime renewability is a very critical thing. Because just in case something happens later in time, and if your insurance company says because of ABC clause, they will not be able to renew your policy, and by the time if you already have some diseases because of which this company may be refusing, at that point of time you will not be able to port to a new company. So whatever the condition be, your policy should be renewable for lifetime. Such policies exist. We should look for such policies and see what are the no-claim bonuses we are getting. Now this no-claim bonus grows your coverage by 10, 50 or 100% per year, irrespective of the claims. Directly, that increased amount combats your medical inflation. Your health insurance checklist. What are the must-haves? What is that you should check when you go for one? I would say insist on all these following things, which is minimum 10 to 15 lakh sum assured if you are an individual, 20 to 25 lakhs if you are a family, if the policy is a family quota, cashless hospitalization in 4,000 plus network hospitals, no room rent sublimit, or at least a single private AC room to be given, no copay clause, or like I said, if it is unavoidable, max 10%. Pre and post hospitalization coverage of 60 days free, 90 to 180 up to 6 months post-hospitalization. Daycare procedures, more than 100 of them should be covered. No sublimit on ICU charges should be there, and no sublimit on specialist fees should be there. And no claim bonus of 10 to 50% per year be there. Up to 100% cumulative. The other thing we saw, lifetime renewability, non-negotiable. It should be there, period. And another thing called restoration reinstatement benefit, which means your sum assured gets reset in the same year. I mean, if I have to quickly give what it is, let us say if somebody has a 10 lakh coverage, and in that year, the person consumes around 8 lakhs or 9 lakhs because of some major illness. And another person in the same family falls sick, or if the same person also falls sick, again runs a bill of another 5 or 6 lakh. Put together, if you see, it is more than the sum assured of 10 lakh. But because this reinstatement benefit is there, what happens is after the person claims that amount for the next hospitalization for self or for any other hospital, any other family member, the coverage is restored to its level of 10 lakhs if the policy was for 10 lakhs. And another must have is claim settlement ratio should be 95% or more, not less than that. And PED waiting period, see to it that it is 2 years or less. And what are the red flags? What are the things we should avoid? See to it that we do not have a room rent capped at 1% of sum assured or 3,000, something like that. What happens is when we are in an emergency going to a hospital, if the hospital does not have a room of that tariff, and if they put us into a room which costs more than 3,000 rupees, 5,000 rupees, 10,000 rupees, that time, not only the room rent is more, the hospitals charge every other charge, doctor's fee, nurse's fee, all those other fee pro rata to the room rent. So all your expenses, the whole bill inflates. If the policy has a 20 to 30% copay on pre-existing conditions, say no to it. If they say, we will give you a very low premium, but it will have exclusions, say thank you. If there is no restoration benefit, please stay away from that policy. And if the claim ratios are below 90, I would say even 95, don't even touch them. Don't even talk to that company. And if the insurer is not on the IRDA registered list, you're back to them. So what I'm saying is, never buy health insurance based on premium alone. The cheapest policy can be the most expensive mistake you would ever make. And now let's see what does coverage actually cost. The numbers are definitely surprising. It doesn't cost us as much as we tend to think. A man who is single, 28 years, living in Bangalore, if he needs a 10 lakh individual cover, it would just cost him 7 to 9,000 rupees, for daily cost of around 19 to 25 rupees a day. And those surgery, cancer, cardiac, these are all just indicative things I'm putting. All the hospitalization charges will be covered up to a 10 lakh coverage. And because of reinstatement, it could even be covered for more, and over the years the bonuses come into it. So 10 lakh could become 20, 30, 40. Automatically it gets adjusted to your inflation. A couple of 35 to 32 years, 15 lakh floater just cost 14 to 18,000, around up to 50,000, 50 rupees a day. A family of four, 38, 35 spouse and kids, 20 lakh floater, 20 to 26,000 rupees only. Yeah. And if the individual wants to save money and he or she goes for an individual cover plus a super top up, let's say a 5 lakh base cover with a 25 top up, just 10 to 14,000 rupees and an effective coverage of 30 lakhs. Senior parents above 60, a 10 lakh senior plan is only around 35 to 50,000 rupees. So, contrary to most of the people's thought, the premium is not that high. And if a person says, hello, I can't afford this premium, do you know? I can afford 7 to 9,000 rupees. Ask him again, hello, if 7 to 9,000 rupees is not something which you can afford today, tomorrow, if God forbid something happens to you and the hospital is demanding 10 lakh rupees to save your dad or your daughter or your wife, where will you get that money from? We know the answer. If you look at the math, the way it works, 10 years of 20,000 per annum, the family would pay a premium of 2 lakhs totally over the 10 years period. Just one cardiac surgery, 4.5 to 7 lakh. If it is a cancer treatment, 30 to 50 lakh. So, the insurance pays 5 to 25 times of your total lifetime premiums on a single major claim. It is true. It happens this way. A 1 crore family floater plan for 2 adults aged 35 in Bangalore, just 2,000 to 2,005 rupees per month, less than your Netflix bill, less than your Swiggy bill. Is our life cheaper than a Netflix connection or a Swiggy bill? We should ask ourselves. Okay. Finally, let's see what are those 5 key takeaways you should have from this session. Medical inflation, a devil growing at 14% is outpacing your salary growth. Without insurance, healthcare will become more unaffordable every single year. The gap between what you earn and what care would cost is widening and is permanently happening that way. We understood how. We saw the costs of different surgeries, what they were 10 years back, what it was last year, and what it could be in the next 4 years. We saw it. Also, we saw the fact that your corporate cover is not enough. Don't fool yourself. It is just not enough. A personal policy is non-negotiable. It's your financial safety net. Completely, it should be independent of your employer or your job status or your company's decision. Your health cover is your decision. You should own it. The younger you buy, the cheaper are the premiums. Till a few months back, only the life insurance policies used to be like that, where you fix your premium and for your life it's the same. But now, fortunately, health insurance also has come up with options where you pay lesser or whatever premium you pay at that age, that is something which you will pay forever. So which would mean every year you delay, it will cost you more, both in higher premiums and in increased risk exposure. Like I said, like a wise man said, the best time was yesterday, the second best time is today. The right coverage is at least 10 lakh base coverage with a 25 lakh super top. I would say though, 25 lakh base is a good choice, but yes, if we are looking at the feasibility point of view, 10 lakh base with a 25 lakh super top up is also good. For a family in a metro, 20 to 25 lakh floater is the bare minimum. Anything less leaves you dangerously uninsured against today's treatment costs. Forget tomorrow's. A health emergency is both a medical and financial crisis. Health insurance is not only for your hospital expenses, it is also to save your financial goals. It is to save your savings, your investments, your child's future funds, your properties. Insurance is what separates financial resilience from financial ruin. Finally, we all know this. Knowledge without action is just information. The next step is yours to take. The next steps could also be like you should be figuring out the right plan for your family. And if any one of you feels that you have done enough and you need a little more help or hand holding, we are there. We also give a free consultation, and what we do in that consultation is we review your current health coverage gaps. We'll understand exactly where your existing coverage falls short before a medical event reveals it for you. We can calculate the right sum insured for your family, get a personalized number based on your age, city, family, and existing health conditions. If you want, we could compare across all major insurers, unbiased, data-driven comparison, not driven by commissions or product push. We can design a layered coverage strategy, if need be, which would be a base policy with a super top-up architecture that gives maximum protection at a minimal cost. We can understand waiting periods and hidden costs for you, know exactly, so that you could know exactly what your policy is covering you for and what it doesn't cover you for before you buy a policy, or if you already bought a policy, we'll help you to understand what it is for. All that we could do with a 30-minute consultation, and you can book a slot for yourself at your convenience by just visiting my website www.davidbabu.com. You can check the available times and match your free time to it and go for it. If you need it, no compulsions. I can also share a Google form which you can fill and let us know if you need us to call you back. I'll also share my WhatsApp channel and other things where you can join them for a regular update or regular information on the industry. Trust me, no product pitches, no pressures, just clarity on your family needs. It is exclusively my, promise to the people who attended my webinar today. Thank you. Now the session is open for questions. If you have any questions or queries, we can address them now for the next 10 minutes. If it is longer, if you need time to phrase it and ask, you may please get in touch with me on my website, or you also have my WhatsApp numbers. You could speak to me on that too. So I'm open for questions. I will stop sharing my screen.
Thank you very much, David sir, for a wonderful session. It was so informative. I think everything that I could think of, you have covered it, and you've covered it really beautifully well, David sir.
Thank you so much, sir. Thank you. So, thank you. Anyone else has any questions which we can address, or we can say goodbye and we'll be in touch then.
Thank you so much, sir, for the excellent enlightenment on the health insurance policy.
Thank you.
I appreciate my company is covering me about the health insurance policy, etc. So this is an enlightenment. Got it, and then I have to now check up really for how much value my company is covering me, so that I can plan accordingly. Thank you so
Yes,
much.
sir. Thank you, sir. Thank you.
Right. Have a nice day.
David sir, one of these days, maybe Monday, Tuesday, Wednesday, I think it'll
Yeah.
really be good for the rest of us to attend your session, because many things we may not even have been aware of. So if it's possible, please do consider. I'll see how the time goes and I'll check with you.
So you mean to say in our community?
Yeah. I mean, in our community.
Always games, sir.
So because what happens is, many things which we take it for granted. And today in your session, I was able to get so much value. So whenever possible, I'll first check with you and then confirm the date, sir.
Definitely, sir. Thank you.
Thank you.
Thank you. Yes, Mr. Sindalnathan, Mr. Venkateshwaran, any questions?
Thank you, Mr. David. It was very, very informative,
Thank you.
and we would definitely catch up and let's understand our financial, rather more than health insurance, how it affects our financial health, and we'll discuss on that, and let's see how we can really improve that.
Yes.
Thank you so much.
Yes. Thank you, sir.
Thank you so much for your time.
Thank you for your time. Thanks for giving me so much time and patiently hearing me through. Thanks.
Thank you, sir. Thank you, David, sir.
Thank you, sir. Thank you. So, if it is okay with all of us, I will just close the session.
Right, sir.
Thank you. Thanks a lot. Thank you, everybody.
Thank you so much.
Thank you.
Good night.
Good night, sir. Good night.